but I hope that in the near future we'll also hear about that.
Right, absolutely. Now, India, when it does bilateral trade and in the subcontinent and even in Asia for that matter, and with Russia, there has been local currency that has been used between the two countries in bilateral trade. Is there a potential of India and Israel also looking at this model?
Excuse me, I didn't hear you
When you
well.
talk about local currency, you know, like a rupee ruble exchange, rupee ruble trade for that matter, even a number of countries in the ASEAN group where India has moved forward with trade happening in their local currency vis-a-vis using the dollar. Do you think there is potential for India and Israel to also do trade in shekel rupee exchange?
Well, first of all, as I said, if we connect the UPI system to Israel, that it will, of course, increase the activity in rupee, also for activity in Israel. So there is some potential there. I do think we all understand that currently the US dollar is, this is the system we're living in, is the main currency. And I think in the foreseen future, we definitely believe in the US dollar. I'm not aware of any other special opportunities in trading with these currencies. There's other risks that are related to that. So this is as far as I'm aware of.
I do want to understand from you, which are these sectors where Israel can help India in bolstering its Make in India initiative?
Yes. So first of all, already today in the defense industries, there's several initiatives that actually manufacture in India with Israeli technologies, but also in other civilian sectors. We're talking about um, agriculture, agri-tech, manufacturing. So Israel, there's actually already Israeli companies that manufacture in India. We're very, very happy and comfortable with the Make in India because we are a small country, not a manufacturing hub. And India, with its scale, can definitely be a good place in order to manufacture our technologies. I mentioned agriculture, but same for other kinds of technologies. You can talk about clean tech. You can talk about other smart manufacturing. So we're very, very open and happy about that.
Moving on to the war that Israel has engaged in for over 2 years now, how do you think the war with Hamas has impacted the Israeli economy?
So of course, unfortunately, a war like this has an impact on the economy. It's very, very natural and expected. And it had a toll. It had a toll on our GDP that was lower than we expected. This is the main figure that we looked at. Other than that, in fact, the economy is doing surprisingly well. Our unemployment is at lowest levels on record. Our currency actually became stronger than before the war. The stock markets have been soaring, roughly 70% and so forth. So we do see very strong investor confidence despite the war. But of course, naturally, we need to allocate resources to this unfortunate situation. Our the deficits were higher than we hoped for. So this year we'll be ending the year at around 5% GDP deficit. And our debt to GDP also climbed. That said, we're doing it, we think, in a balanced way and still maintaining as much as we can a low increase in our debt.
Okay. I do want to understand from you what are the direct and indirect costs of fighting the war by Israel on multiple fronts?
Yes. So there's two ways of talking about these costs. There's the cost of GDP, and there's the cost of allocating money from the government, from taxpayers' money in order to finance this war. The figures that we were been talking about, are roughly, if I put it into equivalent, roughly 15% of GDP, but that is over a span of more than 2 years. So we could talk about 5 to 6% annually that is allocated. It's something that, of course, is unfortunate. It causes a burden on the people. It will entail increasing the taxes. But in the medium and the long run, we're certain that we can weather this. And this is what also the investors show us. We're able to finance these needs at good and fairly comfortable interest rates. So we are optimistic that once the war comes back, ends, and hopefully soon, that the economy is going to rebound very, very strongly.
I would like to understand from you what percentage of the budgetary allocation has been reserved to fund the war, and how much of it has increased since 2023 October?
So it's a bit more complicated than that to really earmark every expenditure that is connected to the war. Some of the costs are actually lower revenues, of course, because lower activity, and some of them are of course, increased expenditures. But I would say that in terms of budget money, budget allocation, we would be closer to the, I would say, 10% of the GDP. That would be roughly the cost. You can talk about, you can see our debt to GDP increase in about 10 percentage points. So this is kind of the area. Most of it, of course, is defense expenditures, but there is also civilian expenditures. Unfortunately, they're related also to this, and there is a burden. We have communities that have been hurt very much by the horrible terror attacks of October 7th, and there's costs also for rebuilding them. This is one area that we're investing in.
Right. Now, how equipped is the Israeli government in its ability to absorb these increased costs to fund the war?
So as I said, we're very happy to say that we've received very considerable investor confidence, and we were able to finance these needs in a comfortable and smooth way without a substantial increase in the interest rate. So currently we're financing our debt in local currency, in shekels, not very differently in terms of interest rates from before the war. Of course, there's an increase in the risk premium, especially we see it when we look at the cost of abroad, but it is definitely manageable, and we are happy to say that we can absorb it smoothly.
Right.